All righty. Kate, do you have another speaker for me?
Yes, we've got Toni Hansen.
Tony, can you hear me?
Good day. Yes, I do hear you.
All right, why don't you go ahead and get your PowerPoint up?
Okay.
Toni Hansen is one of the most respected technical analysts and traders in the industry, with a high reputation for accuracy in both bull and bear markets. A pioneer to electronic trading, Tony has over 2 decades of experience in trading stocks, futures, options, and Forex. I think you click the right button. You
All
have
right.
mastering market pivots.
Excellent. Okay, well, thank you for that introduction. I'm going to go ahead and get started here. So I've been trading online almost since online trading was at its infancy back in the mid 1990s. And I didn't really have any other experience in the markets. And at the time, things like technical analysis, a lot of the indicators and stuff, we didn't have programs for them on our charts. So we basically had to rely on learning to read pure price action. So a lot of traders that you'll meet that, come from that time, even the 80s and 90s, we're really good at reading the actual price action in the markets without using a lot of indicators. And what I want to share with you today are some of the skills that I picked up over the years and kind of the like easy tricks of the trade, things that you can walk away from this class and be able to apply to your own trading. And these are things that you're going to be able to recognize visually to begin with. But I do have one indicator that I am going to share with you. And it has remained a staple for the better part of about 20 years when I first started using it. And so I'm going to show you how to use that as well. And hopefully you will have a good idea of how you can actually watch for and learn how to master market pivots. So, of course, when we talk about trading pivots, we can get very, very specific, meaning we can look at the absolute highs and lows in the market, or we can look at the very first continuation moves in a brand new trend. And I do both. I've been trading live for over 20 years as well. So, folks that have followed me over the years have seen where I do this in real time over and over and over again. And it's not a trick, it's not some like freak accident. It's something that took me years to learn because unfortunately, I didn't have mentors or people that I could learn from. I had to learn it all through trial and error and on my own. And that is very, very time consuming. So a great thing that I get to do today, and one of the reasons I love teaching is that I get to share with you a lot of shortcuts that you can use in your trading now. And I'm going to open up my chat screen as well so I can see any questions you guys might have. And thank you. Shoot. Timothy just said he was just reading one of my books and courses from back in the day from 2009. And you know what's interesting is all of the things that I taught back then are things that work incredibly well still today. It's just that I've honed my skills even further over the last 15 years since that course came out. So when we think about the markets and we think about charting, what's really interesting is that all we're doing is we're looking at visual representations of human emotions and human behavior. And really, these all can be charted. I come from a background before I got into trading of anthropology and archaeology in particular, and as well as the arts. I was one of those, dual major type of people back in the day. So I grew up learning the arts and learning to be a very visual person. So when I'm looking at the markets, looking at price action in the forms of charts are really crucial to me. I could never get the hang of trading off of like the DOM or Level two, I just didn't have as much of a feel for that. But you show me a chart and I can show you similar behavior from the day before, a couple days before, a couple weeks before, and even a couple years before. And that's what I'm going to show you here today. So when we look at, hey, can this really, really happen? You know, these are just some of the examples of some calls that I've made. And these are two different markets, two different same time frames here, but it's showing you where we can really nail those absolute highs and lows. So these are ones that I did live. And to show you that that is absolutely as true today, here is one of my trades from this morning. And this is the low in the Dow here earlier today. And you can see a very, very similar setup from one of those previous classes, which was the last time I taught this particular free class was about a year ago. And this is one of the setups that was taking place at that time that I called live in my League of Traders. And what's interesting is that the setup today is the exact same strategy as that setup almost exactly a year ago. So if you look at this little drop for that low there, that's this low here. When we look at this portion, that is this portion here. And then when we look at these three little lows right here, 1, 2, 3, those are the same lows that we had this morning. So literally the exact same exhaustion pattern that happened 1 year ago, almost to the day, is the same setup that triggered the market correction this morning on the Dow. So that's how accurate this can really get, you guys. And when we dive into this, what I'm going to do is I'm going to share with you a couple of the key traits that go into patterns like this so that you can use them and help you identify what's going on in the market today. Exactly. Cycles, rhythms, vibrations, patterns over and over. And the more exposure you get, the more you develop your templates for these patterns, the more confident you're going to become in them. And the better feel you're going to have for them as they are happening live in the markets as well. In fact, one of the things that I really recommend is that when you're studying a particular pattern or strategy, if you go back and replay those charts multiple times, not only the ones that end up working out for you, but also the ones that failed, you're going to start to see key differences in them and things that are indicating that a certain action is going to happen and has a high probability of happening. So what I'm going to share today are just some of those key things that we look at and tricks that you can look for. And hopefully get you into understanding one of my core strategies that I trade, which is called a Phoenix. This one here is a momentum reversal, and it's a very specific pattern of momentum reversal. It's one that we call a false first low with the momentum reversal. And I'll show you a template of that here in a little bit as well. So first things first, can this be done real time? Absolutely. So I teach a class every day. It's called League of Traders. And I'm in there at noon Eastern. So right now, this is our little field trip to come hang out with you guys. And so I'm in there at noon Eastern to 1 Eastern, and I teach trading every single day. And we do live market analysis. We do outlooks for the market for the rest of the day into tomorrow, often into the next week or two as well. So for example, yesterday in League of Traders, we had a very strong bullish bias for the rest of the day. So that was at noon, and you go take a look at the charts, and sure enough, our markets continued higher throughout the entire rest of the day. So one of the first things that you need to know about trading is to look at what we call impulse moves in the market. And these are areas of average to stronger than average momentum movements, meaning that we are looking at a zone of trading where we have a clear-cut channel. So if you're connecting your highs and your lows, for example, you want something that's trading within that channel. Pay attention to this zone right here and this zone right here because we're going to be coming back to that. So when we're looking at levels where pivots can happen or reversals of trends, not necessarily that you're going to be wanting to trade the absolute pivot lows like I often do, but to get into a new trend when it is triggering that very first continuation setup, you need to have a good feel for how long a trend move can last. And what's really cool about the market is that these larger impulse moves repeat over and over again, where as long as the momentum or the rate of change of the price action is the same, you're often going to get the same size of a move as well before you get a pause. Now, like everything in the market, these happen on different scales. So on smaller time frames, you're going to see a lot more of the smaller impulse moves and waves repeating. So like little movements like this, which you're going to see over and over and over again. So you'll see more multiples of them. But as you go up to larger and larger time frames, you find fewer and fewer that are repeating. So it can help you with getting larger time frame moves as well as understanding where closer time frame targets are going to be. So, for example, on the reversal here into that last hour of the day, what this did was it helped predict the resistance where this breakout from this pattern, again, this is called a phoenix here. We'll be looking at this in more detail. So the pattern looking for target levels that are those measured moves, as long as that momentum is the same, that can be a really great key for helping you identify targets. So when you're looking at mastering market pivots, we're not only looking at where we want the market to turn to get into it on a new trend, but we also need to know where do we need to get out of a trend? Where can we start to partial out or bail on a longer term setup, start to get more aggressive with our trade management so that we're not giving back a lot of the gains and understanding exactly how far that trend move can go. And that is one of the ways that we use these impulse moves is just looking simply at previous impulse moves, something you can do very visually, and you don't need any special tool. You can use a Fibonacci price extension if you want to. That can help you with things that might have different momentum where you can look at some of the different target levels. Here we go, I'm going to pull up a chart here, for example. So like this is the MES this morning. So if we're looking for a breakdown for an impulse move, looking at some of the comparable impulse moves in the past, and you're looking for continuation, one of the ways that we would use kind of a little bit more of a visual tool is if you wanted to use Fibonacci price extensions. So that is one thing that you can use that can show you some of those resistance levels. So for example, here's the 100% for that continuation, except that the overall momentum was stronger on that second move than the first one. If we put this over here a little bit later today, and this is Ninja Trader for you guys that are wanting to know the charting platform. Here is another example. Now, what you'll notice though, is that as this is coming out, we don't have the same momentum. So what that means is that you've got to often start looking for some of the closer price levels for pauses in the market where things can stall a little bit earlier. So if this had broken down and maintained the same momentum or rate of change over here, this would have been the next support level to watch for. I'm just showing you how to use this tool though. And if we actually look at, let me see if I can, again, Zoom does not like to go into hover mode. So I'm going to see if I can find my NASDAQ chart hiding in the background somewhere. Here we go. Now here on the NASDAQ this morning, this was another one of my setups this morning, and this was a type of Phoenix. And we will be coming back to look at this in more detail in a minute. But if we look at that original impulse move coming off of the lows, here was my trigger zones in the Phoenix. This is where I took the trade. We'll actually retrace back to this in a second too. But if we look at how to put that Fibonacci price extension on there, again, this can help those of you that struggle with a little bit of that visualization. This can help you with that. So this shows you where that 100% price extension move is going to be at, so that you can start to look to take profits in that zone or look for levels of where this sort of resistance can begin to get a reaction. So maybe you want to take partials in it, maybe you want to take everything off. I will do both, just depending upon what's going on in the overall market. So for example, lately I've been doing a lot of first impulse move trading, meaning this would be considered scalping for some. Basically, when I get a setup, I've just been trading those first impulse move targets for most of the moves lately because we're in what I call widening up zone in the overall market, where we do get a lot more back and forth movement. And we've seen some levels of where we've gone into those bigger impulse moves on larger time frame charts too, but those are comprised of smaller impulse moves as well. So you can trade them in segments like I've been doing lately. And I'm going on 15 days here without a loss. And the day before that was very small. So you can trade them this way, or you can look for corrections to hold for continuation moves as well. That's just a different type of trading. And I do that a lot too, just not in the current market right now. Let's go back to our chart here. Move that out of the way. So this is the first thing. And again, these impulse moves are on multiple scales. So you're going to see them on smaller time frames as well as bigger time frames. You'll just see more examples when they're taking place on smaller scales. But the cool thing about impulse moves is that they tend to repeat themselves in waves too. So oftentimes, if you get one wave, your second wave, as long as the momentum is the same, will tend to stop pretty dang close to where that exact measured impulse move is. So this is one of those original tricks that you can use for identifying some of the core support levels. So for example, this was a trade here on the Dow very recently. And you'll notice, it was actually on the 20th last month. And you'll notice that when we look at the impulse wave action, where the momentum here is about the same as those previous two, that's showing me that I've got a support level. One of the other things that is interesting on this chart that helped me with timing this exact reversal here is if you look at this trading channel, look at how it broke the channel here. So even though the momentum is the same on the downside, the fact that it broke the channel first, what that's doing is it's starting to create this rounding at the low. So one of the other key features, and I didn't put it as one of the things to watch for in this particular class, but I'm going to cover it anyways, is that in a trend, once you get the break of that trading channel and then you look for a reversal strategy, that strategy is going to be a stronger strategy, a higher probability strategy than if you're looking to take a reversal that is still inside that trading channel. So you might still be going to a lower low, but you've broken the trading channel at this point. So that for me is a key indication that, hey, you know what? Now I can start to look for reversal strategies. And if you remember that earlier slide of the Dow that I traded this morning, you'll notice that one of the things that I said was on there was a 3-low move with a false first low. This is just another variation of that same strategy, just getting a more compact foot in here. So I often look at the market in the formation of a leg here. When we're looking at trends, we often see a leg formation, and that's comprised of your hip, your leg with your kneecap in the middle, and your foot, with this being the ankle zone. So this is something those of you that have been trading with me for a while or have, gone to some of the previous classes I've done, it's a visualization technique that you can use. And it often represents a zone in the market where you're likely to get a good bounce off of those lows. And the more tilted this is, the stronger that bounce often can be. Now, this one still was a really strong one just because of probably what was going on a larger time frame, but it is a good example of that leg with the foot on it. So a couple of kind of additional little things in here that, weren't part of the class I prepared per se, but are something that you're going to see over and over again here. So another thing that we need to watch, and that is going to be momentum. So when I was looking at the impulse moves, in order to rely on those measured impulse moves, you need things that have similar momentum to them. But what you're going to notice in a market that begins to shift is that that momentum often shifts before the overall market does. Doesn't always happen. We do get situations where there's V bottoms or V tops where you don't see that smaller momentum shift. But notice that that other trait that I mentioned, where you're looking at your trend line or channel break, is also at play right here. And then what we have is this two-wave corrective type of move. So this pattern in particular is one of the strongest reversal strategies out there, and it's called a phoenix. And what we're looking for is for this momentum to shift, ideally as that trend line breaks, so that the momentum shift is holding the upper end of that trading line, that trend line or that trading channel, but it's shifting. So if you transect the new channel that's formed, you're going to get a really strong breakout as that second pullback begins to break higher. We had this exact same setup on the Dow. I believe it was yesterday morning that I traded, and one of them that we discussed in League of Traders yesterday as well. So if you pulled up the Dow chart from yesterday, you would find the exact same strategy yesterday morning. I'm going to see if I can find it really quick. I'll scroll back on my Dow chart. I can't find it quickly. Oh, here we go. So this is the same strategy right here. And this is my first trade yesterday. So again, channels breaking, two-wave of correction. This triggers the buy setup. So the same zone here is the same zone right here. And this was trend exhaustion too. This was the third impulse move on the bigger time frame. So we had two more impulse moves that were approximately the same size that happened before this. So when you get three impulse moves in a row that are the same size, you have a better chance that you're going to get a larger trend reversal. I actually think in trends more in waves of two, a lot more than I do waves of three, but it still stands that if you see three in a row that are the same momentum size and about the same price size, then you've got a better chance of getting a really strong trend reversal coming into play. So this is again almost exactly the same strategy that was happening about a month ago on the NASDAQ here. Actually, this one was a year ago. This one was from the last time I taught this class. So this was 2023. So same strategy yesterday morning as was exactly a year ago. So that momentum shift Very, very key. And another thing you can look for is if this is your first main impulse move as the correction, second impulse move on the downside on the small time frame being about the same size is also a crucial tool that you can use for timing that. So we've got the channel break. We've got the momentum shift. So compared to this downside momentum over here, you've got momentum shifting here. Then we have the two waves of correction. So we've got a wave count issue here, or wave count trait. I would say it's not an issue. It's actually really good. And then you've even got a little bit of a smaller kind of momentum shift here too, before that triggers for the reversal. And you're going to see this strategy over and over in the additional slides that I have here too. So here again, another one of the same strategy. This is the Phoenix, and this is from, I believe it was last month. It was before our futures shifted into June, but I wanted to show it to you because it's the same strategy. So we've got 3 impulse moves on the downside. The sizes are a little bit different on each of these though, but here you've got another 3 waves. We've got the break of the trading channel, and then we've got that momentum shift, and then we've got our 2 waves of correction and the smaller shift there in the momentum. So same trigger zone. Yes, green is entry, exits are blue. Thank you, Scott, for that as a clarification. So I'll show you how to use these fib bands here in a second. But this is the core Phoenix strategy. And so these are some of the traits that we want to be looking for that. And this is a setup that you find nearly every day in the markets on some time frame or another. So here's another version of it where you can see a little bit of that comparative final impulse move on the downside. So you've got a little bit of that earlier shift here, like what we had from a year ago is what we had here. And this was one of my trades, I believe it was on Tuesday, where again, it's a Phoenix, but it's not quite as pure as the ones that I've showed you so far. So you don't have the 2 wave in here. Instead, we have that initial wave down, and then we've got a little bit of a momentum shift in here. But a lot of the traits are the same. So we get those measured impulse moves. Here's a kind of a tilted 2 wave correction in the middle. We got that channel break. And then we've got that overall momentum shift where it's basically just at the upper end of that larger trading channel. So similar type of setup, but this one is from Tuesday and just wasn't quite as pretty as the one yesterday on the Dow was. Here's another example. This one is a little bit different though. So what we're looking at here is momentum. And what you'll notice is that this has kind of a stronger move to start with the momentum move. It's a pretty comparable impulse move when you're looking at previous impulse moves that are the same momentum. These are a little bit weaker because this is a little bit of a stronger straightforward drop. So it's able to go a little bit further than these moves that are just a hair weaker than it is. It doesn't have the channel break right here. It kind of just taps it instead, but it is hugging in the upper end of that channel. So when we look at the overall momentum, we've got 2 smaller impulse moves as counter trend moves. And even though this is a strong move on the downside, this is nearly as strong on the upside. So this whole channel here now creates kind of a check mark formation. And that's just another type of a Phoenix here. So I just wanted to show you this example too, but it's a little bit weaker. So by not breaking this channel to go and then form the Phoenix, it's can be a little bit harder to get the momentum going after that point. We actually ran into that struggle here this morning on the Dow. Let me show you. So here you get your two wave of measured moves. This was the buy setup that I took this morning, that pivot low this morning. But you'll notice that overall this momentum is still pretty strong here. We're getting these two measured moves, so it's helping to flip things around this morning, but it's not enough of a momentum shift that it really helps turn the larger trend. So it helps for like a shorter term support level to flip that a little bit. And it's basically just a steeper version of this. So instead of going into Phoenix, this goes into a pattern, I call it 2B, which is another type of reversal pattern. It's basically just taking this last little segment and it's changing it so that the momentum is stronger on the downside. So your two smaller impulse moves that you're looking at here and here, those are the ones that trigger that particular reversal strategy. And just like how ideally we would want the Phoenix at kind of the upper end of that trading channel, if this breaks that bigger trading channel first here and then goes into a 2B, your 2B has a better chance of a full trend reversal. So if this pivot high here is still inside that bigger trading channel, then it can be harder to get that bigger pivot or bigger reversal pattern going into play. You guys are probably going to want to go back and watch this class again multiple times to take notes if you're not taking those notes as you go along, because you'll probably notice some things the second time around that you missed the first time around. Let's go forward here. So this is just kind of a collage of all of these different phoenixes, and you can see all of those similarities of how they are forming. So some of these do have a little bit of that stronger pullback and drop. And so instead of breaking that full channel here, it's hugging the upper end of the channel, just like the one that we were just looking at. So even though you can get that strategy for the setup, and this one has that 3 points for it, instead of the two-wave correction, it has the 3-point lows. That can mean that this might not turn the entire trend around. It could just be a short-term impulse move setup where you would just want to look at your gains on that first impulse move as opposed to looking for an entire trend reversal. This can also be used to trigger an exit if you're short. So if you see a Phoenix forming or a 2B forming and you're short, that's a good indication that you're going to want to be taking your gains and protecting your gains on those trades. So we've really been looking at momentum and impulse moves, but also some of those traits that are taking place within the channel itself. So here is another strategy that you can use this as a pure template. This is one of my absolute favorite trading strategies as a whole, but you'll notice traits of both of the strategies that I've showed you so far, where we've got the false first high or false first low, and then 3 pivot highs, evenly spaced, or 3 pivot lows. And then over here, we've got the avalanche, which is the opposite of the phoenix. So look at those traits. Impulse move, very similar momentum, similar size. So at this point, you know you're coming into some resistance and it's possible to get this going into a widening up zone. Now this impulse move is a little bit stronger than this here. So wouldn't typically want to short this because it could just as easily go into a trading range It could go into a slower correction, maybe do like a bigger phoenix, actually, would have been a possibility at that point too. So we want to wait until we see momentum beginning to shift before we put a trade on. So don't rely on just the measured impulse move. You want to look for other traits like the momentum shifting as well. So here we have that false first high and then our 3 highs. And this is the momentum reversal, Momo reversal. So this becomes the first short setup. And then the second one is the avalanche. So just look at that and think of it as the opposite of the phoenix. 2 smaller counter trend impulse moves where it broke the uptrend of that trading channel and then formed the 2 counter waves. And then that triggers the short. So you've got that momentum shift taking place in there that helps turn this around. So overall, it creates this nice rounding off at the highs. If we look at that trade here this morning on the Dow, it's the same type of strategy. So here's you can view this as your false first low zone. 3 lows here. This is also another type of false first low. Even spacing between each of those. So you're basically looking at this flipped over. And then this goes into a little teeny tiny baby phoenix. And to show you exactly how precise my timing was on this is a 1-second chart. So when that broke, I had my order on the books as a market order, and I was sliding that down. So I put it right above there so that it filled it as soon as that little baby channel broke higher. So I was already poised to take advantage of this once I started seeing that momentum shifting coming into play there. So that is basically like taking this short zone here. And the cool thing about this is that it is 100% teachable. This is something that once you learn the strategy in depth, the more you see it, the more confidence you're going to have. And the more of the details of the strategy that you know and understand, then the more confidence you're going to have as well. And you'll be able to take this and have a really clear idea of where your targets are, where your stop is going to be, and it takes a lot of the emotions out of trading. So it takes a lot of that fear component or the greed component as well, and it removes that. So the more technical you can make your trading, the better your trading is going to become. And I think that's really a key point that I want to emphasize here with you guys today, is that the things that I'm showing you, these are quantitative things. They're not like, oh, it's a gut feeling that it's a buy or a sell there. No, it's a quantitative thing. So if we look at, for example, the Dow right now, we've got that 2-wave impulse move here on the downside right into this previous low zone. This is a really good level of support here, at least on this small time frame, 10-second time frame there. And this is why I'm able to do this live and not let emotions get too involved when I'm doing live market analysis, because it's technical analysis. It's technically based. It is something quantifiable that repeats over and over and over again. So here's another example of a phoenix, but you'll notice that I did something on this chart. I added a Fibonacci fan. So I don't use many indicators at all. In fact, Fibonacci is really the only indicator that I use when teaching traders. And on my own charts, I usually don't put it on because I know where they're going to fall. Um, as Scott can attest to here, a lot of times I'll draw where the fan level is going to be without, and then add the fan onto the chart afterwards. Because the more you see it, the more you're going to be able to predict where exactly that is going to be. It'll be as easy as looking at measured impulse moves can be. So on here, we've got a fib fan where this is our first uptrend move, and it's a pretty steady move. So there's a little bit of chop in there. It's not just like a straight up move. So that means that it is a trend that we can use a fib fan on. So we take the low of our fan to here, and that projects out these different Fibonacci fan levels. So this one is the 76.4% fan. This is a 61.8%, 50%, 38.2, 23.6. So these are the fan levels. So when we're looking at a Phoenix, when we add a Fibonacci fan level on there, that gives us another pro that we can watch for taking that trade. So you get the channel break, you get the momentum shift, and in this case, it is more the three lows and then the Phoenix. No false first low here on this one. And then that triggers our larger Phoenix setup. Couple other traits to watch for. It's nice when your Phoenix has declining volume as it is doing that momentum shift. So here's that momentum shift. A bigger trading channel like this, and then you're getting the shift here. So if you get that volume going lower and you also have that momentum shift, those are going to be additional active traits. This was one that I did as a continuation play as well. You've got the momentum shift, the two waves of correction, and you also have a comparable size of correction as well. We're not going to get into a lot of those other traits. Timothy might be familiar with those from one of my older classes. But the time it takes for congestion to form, that is also another trait that you can watch for visually as an indication of where something has a high probability of triggering. So for example, if we look at the correction here, and then you're looking at the congestion here for this little avalanche, you'll notice they take about the same amount of time. And then this trying to go into a Phoenix here is also that same amount of time. So that's another trait. So I'm giving you a lot of extra traits here than I planned to go into. But it just emphasizes how the market is made up of building blocks. So when you're looking at price action in the market, you're looking at these building blocks. Impulse moves and momentum are two of the building blocks. Time development, which is one of the aspects that Fibonacci fans can help you with, is another. And then volume is also another one of those building blocks as well. So if you're trading on NinjaTrader, NinjaTrader does not have Fibonacci fans built into it, so you would need to do it as an add-on. So I did create a plugin for NinjaTrader. So for those of you that are trading on NinjaTrader and want to be using the Fib fans, which I'll show you more about here in a second, this is a link that you can use to get that. So just go to tonihansen.com/trade tracker, and I will type that in the room here too. Oh, Kate already has here one link, /trade tracker. There is the link for adding Fib fans. And sorry, Kate, I did something a little different here. I know Sarah sent you different links here. So I'll go ahead and post them in the channel for that. Now, if the momentum is stronger than average, so you get a stronger impulse move up like this, we can't go and use the low to the high of that impulse move and put our fib fans on there. So what you would do in a situation like that, if it's stronger than average, if you've got two highs, drag your fib fan over to that second high, and that's going to give you the proper level for your Fibonacci fan. So extreme momentum impulse move. So for example, this here, you wouldn't want to be using this for a fib fan. It is just simply too strong. So what you're looking at for a fib fan is going to be an average impulse move, not a stronger than average one. So if it's stronger than average, if you see those two highs, drag it over to the second high and use that instead. And this is one of the things where it was trial and error, the more I tried to figure out, hey, how can I use these fib fans to teach traders that timing and kind of get it even more precise? This was one of the things we did. I have other tricks as well, but this is one of the easiest for you. So technically this could have been a buy right here coming off of that 76.4% fib fan. I was a little bit slow on my entry on this one. But it is still a Phoenix. You still have that bigger channel break. You still have your two waves of correction in here, and you still have that bigger momentum shift. And ideally, volume would have been dropping at the same time as well. And the nice thing about this is that that 23.6, 27.2% zone up there in gray and blue, that serves as an awesome target level to watch for resistance as well. So you often see things stalling as it's coming into that upper fan level when you have your setup coming off of that lower fan level. So that's another tip. And then watch for things like those measured impulse moves. So that tells me, hey, right here, we're starting to come into a level of resistance where I might need to be aggressive in taking off some of my partials, or if I'm only going into the trade to hold for that first main impulse move, start to expect that momentum to begin to shift at that point. And then this went into a 2T, which is the opposite of the 2B. So two smaller impulse moves, and that tells me, okay, that's the end of this portion of that trend here. So here is the NASDAQ this morning. So this is another example of where it had an extreme impulse move up. But what's the difference here? The difference is not only does it have a double top, that's the same. So originally you could have used your fib fan from here to here, but then it went to a slightly higher high before it would have pulled back into where that fib fan would have been. Actually, let me show that to you on the actual chart. Let me find that chart and then I'll put it on there for you so you can see the movement of that fib fan. Here we can show you on this one. So here's the NASDAQ this morning. So to add the fib fan from the chart, I would go up to my little pencil here, drawing tool, and now Trade Tracker, my tools are down here at the bottom. So I select the Fibonacci fan, go from the low, and since this impulse move is so high, look at what happens. The fib fans don't help at all. If I move it over to here, the second high, then what you'll see is I'm starting to get a little bit better, but when that does that pullback, it doesn't come into the 76.4%. It goes to a slightly higher high first. So that means I want to take that fib fan over again. And I'm going to use this as my fib fan adjustment. So there's multiple ways that I use the fib fan, but they all have rules to them. They're not random. They're all based upon, hey, this is the type of action we had going into the correction. So this is how we need to look at our Fibonacci fans. So the first adjustment was using it to this high here, but because it went to a slightly higher high, that meant I pulled that fan over. That gave me my new support level. So my buy setup this morning, this one I was more aggressive than that previous chart that I showed you. I took the move coming off of that fan level, and then I also took the little baby Phoenix as the continuation there. So that serves as a really good tool to help you with the timing for those Phoenix levels, even if it's not a pure two-wave corrective Phoenix. Overall, we still have a time correction, not a price correction. So when we transact that megaphone that's forming, we basically have a flat correction, just similar to like what we would have in a Phoenix. So here, this goes back to another earlier trade again. I don't remember the date on that, but it would have been within the last month because it was after our contract switched over here. So you've got the June contract here on the NQ, and you'll notice that we had that bigger channel break. And this is one of that I traded with a higher risk setup here down to at the low, so it was an absolute pivot. But the continuation was a type of Phoenix that was very much the same type of Phoenix today. So it had moves to higher highs, and then it had a double high. So this one was a little bit reverse. It had a high and then, the two highs. But overall, you've got that shift coming into play, the deeper pullback in here, and then the reversal coming off of that low. So in this case, you've got that inverse head and shoulders as well, and you have that same timing here this morning also. So if you're looking at, size of corrections, and you're looking at your time development, this is a really good do or die spot when you're already starting to shift those momentum moves. So in this case, I used the fib fan from the low to that second high. And that gave me the entry trigger that I used for the Phoenix there. And you can see the fib fan here. This was something I was, these fib levels here, just kind of ignore those. I was using those to time the original pivot down there. But you can see that time development aspect here as well. So the thing that I want to, really emphasize here today is how repetitive the market is. It just repeats that same setup over and over again, or different variations or versions of the setups. So again, if you're on NinjaTrader and you want to learn how to use those Fibonacci fan tools, which are going to help you avoid early setups as well as late triggers so that you can time those trigger points for those pivots more precisely, you can get that at tonihansen.com, trade tracker /trade tracker pro. And I know I'm about out of time here today, but here is a chart of our Russell. This is the mini Russell here this morning. And look at how many of these similar traits we have. We've got that momentum shift coming into play. This is technically a Phoenix zone in here, but because of what's going on the larger time frames, it doesn't immediately go into as strong of a reversal, but it does indicate that this is an exhaustion of this trend. So if you were short on the megaphone or the avalanche up here, this is showing you that we have trend exhaustion at this point. We've got those false first low and then the three lows. So you've got that trend exhaustion coming into play here. All right, gang. So I want to thank you all for joining me here today, and I hope you learned a lot. Here's another example of action on gold this morning. Actually, before I move on, this is a resistance level that I used with the fib fan again, where it was an adjustment to the second that triggered the short here. So the exhaustion of this trend here coming into play there where it broke the channel. So it's a type of avalanche. Here's a 2B. So over and over again, these fans are going to be serving as good support or resistance. I forgot I snuck this slide in here. But if you want to learn more, I highly recommend joining me for my Generate an Income with Growth Mindset Trading Bootcamp. So this is a mentoring program I did that was over the course of 5 days. And it goes into not only overcoming like emotional aspects of trading, but how to develop a technical trading pattern and build your confidence in that pattern. It goes through all of the building blocks that I use, not just the ones that I highlighted here today. And it goes into my absolute favorite reversal pattern. So looking at a simple head and shoulders as a reversal, but how to make that a much more highly successful pattern, then if you just go and Google how to trade a head and shoulders, don't follow any of that advice that comes up on Google. It's horrible. So you want to dive into those building blocks of what actually creates a head and shoulders or an inverse head and shoulders pattern. So the pattern like the reversal on the NQ this morning. And you can get that at tonihansen.com/generate. The link that Kate put in originally, that's for an extended pivot class, but this one is 3 times as long. So both of them are great classes, but this one goes into even more of actually how to build that system from the ground up. So if you have your own trading strategies that you like, that you want to really hone and make them more successful for you, then this is going to be an awesome class for you. Timothy asks, you use a lot of different time frames and tick charts. Is there a preferred one? Are you trying to match that day at time speed visually communicate best? And am I running all sessions, not just the day? I do run all sessions charts, but sometimes I'll look at the cues to give me an idea of what's going on just on the intraday charts. But I primarily trade all sessions timeframes on the futures contracts. And for time frame versus tick charts, I love them both equally, but I do gravitate more towards time frame charts during the early part of trading. So pre-market and into the first couple hours of trading, and then I slowly migrate over to using more of the tick charts. But the techniques that you learn in these classes that I have here, especially this one, it doesn't matter which one you see the setup on. There's going to be pros and cons of whether you're using one versus the other. But once you're putting all the building blocks together, it's going to tell you which one to gravitate towards. So you might see, for example, comparable time development on a tick chart, whoops, like the NASDAQ here, where we're looking at our distancing between our lows here. This shows up really cleanly on the 200 tick chart this morning. And it might not show up as cleanly on a time frame chart. Let's see what that looks like actually. So the time frame chart for this morning, it looks different. And actually this is a good example because I prefer it that if your timing is different, that one of them goes out further than the other. So if we just use the time development here to here over, this could give you a false setup right here. But it would have been too short on the tick charts. So if the timing on this has the tick chart where it's proper, but it's too long on the time frame chart, that's better than if it is good on the tick chart but too short on the time frame chart, or vice versa. So having one be too long is better than if you're looking at one being too short. And another trait is that these often double out. So if you are early, double it out, and that's usually going to give you your next do or die spot. All right, everyone. Thank you so much for having me here today. And I know you're going to have a number of great continuations of setups. So I'm going to let Kate go ahead and take back over